Samurai Wallet is being prosecuted by the DOJ. President Biden introduces an astonishingly high tax proposal, and the US economy appears to be headed towards stagflation. And despite all of this, Bitcoin, which has historically traded like a risk on asset, has held its own. Maybe, just maybe, the market is finally seeing it for the risk off asset that it actually is. We'll discuss all this and more in today's video. The FBI, in cooperation with the IRS Criminal Investigation Unit, announced on Wednesday that they have arrested the founders of Samurai Wallet. Keon Rodriguez and William Hill are each being charged with conspiracy to money launder and conspiracy to operate an unlicensed money transmitting business. These charges carry a maximum prison sentence of 20 years and 5 years, respectively. In the press release, the DOJ cites multiple social media posts and other marketing material in which Samurai allegedly encourages quote unquote illicit activity. Without haste, the Bitcoin community has voiced their support for Samurai. Samurai offered a service known as mixing, which allowed users to batch transactions in order to increase the privacy of their on chain activity. Bitcoin is a transparent public ledger, which means that all the transactions that take place on the network are visible and auditable. Wanting to maintain privacy in your transactions is not unreasonable, nor is it indicative of any kind of criminal activity. When sending Bitcoin to someone else, you probably don't want them to be able to trace your coins back through the chain and find out how much Bitcoin you have in total, which could make you vulnerable to a potential $5 wrench attack. On Thursday, the FBI issued a formal warning against quote unquote using cryptocurrency money transmitting services that are not registered as money service businesses. This makes it sound like self custody could be the next target. In the eyes of the fiat oligarchs, anybody holding their own keys and running their own node could be classified as a money transmitting service. And on top of that, it appears like the government has little desire to see you hold Bitcoin as a means of avoiding the pain of inflation. The Department of the Treasury issued a 325-page document explaining the Biden administration 2025 budget proposal. And in this 325-page document, on a tiny footnote, it explains how the proposal will increase the top marginal tax rate for capital gains to 44%. Even more egregious, the proposal includes a 25% tax on unrealized capital gains. So if you hold an asset and its price increases because the dollar is losing value, you still get taxed. That's not right. Now, thankfully, it's highly unlikely that such proposals would get passed into law, but the fact that they're even in consideration is unnerving. Remember, income tax started as a temporary measure, but as we all know, fewer things are less temporary than government programs. And coincidentally, these actions in Washington, D.C. are taking place at the same time that US economic data shows serious signs of weakness, both in regards to inflation and economic growth. The Q1 GDP report came out this week showing a 1.6% annualized growth rate. This was well below expectations. This is now 2 consecutive quarters of slowing GDP growth and the lowest growth rate since the second quarter of 2022. This slowing growth rate is taking place in spite of the fact that CPI, the Federal Reserve's preferred measure of inflation, has remained elevated and will not get down to their coveted level of 2%. How can this be happening? You may remember your college economics professor teaching you that you can't possibly have a slowing economy and rising inflation at the same time. Well, perhaps it has something to do with the lagged effects of the fastest, most aggressive rate hiking cycle in history, combined with multi trillion-dollar government deficits. These are two counteracting forces. Essentially, through two different entities, the Federal Reserve and the Treasury, the government has its foot on the economic gas and brakes at the same time. And they've begun slowly letting off the brakes since the Fed paused rate hikes last year. And all of this has come on the back of the largest expansion of the money supply in the history of the US dollar that took place in 2020 and 2021. Yeah, so perhaps all of this might explain why we might be headed towards stagflation, with inflation rising and economic productivity slowing down. The readily apparent fragility of the fiat system is why we are seeing many people choose Bitcoin as an alternative system. People aren't choosing Bitcoin because they want to hide drug money or fund terrorism. They're choosing it because it provides a clear set of rules without any ruler at the helm. 21 million Bitcoin, 10-minute block times. There's no dilution, no censorship, and no counterparty risk. It's that simple. These properties make Bitcoin the ultimate risk-off asset. Those who've studied this understand this, and maybe the broader market is finally beginning to understand it as well. Because despite this week's negative headlines, Bitcoin is still hovering around $64,000 per coin. This is about 12% down from its all-time high, which is on par with other historical bull market drawdowns. You didn't think Bitcoin would become the next global reserve asset without a little volatility along the way, did you? Price is found at the intersection of supply and demand, and the available supply at current price is dwindling. 65% of the Bitcoin supply has not moved in a year or longer, and as you're probably well aware by now, the amount of new Bitcoin entering circulation on a daily basis just got cut in half. The halving, a once in every 4 year event that cuts the Bitcoin block subsidy in half, brought a storm of on chain demand, with daily mining revenue actually reaching new all time highs on the back of the elevated transaction fees, in spite of the fact that the block subsidy dropped from 6.25 to 3.125. The surge in on-chain transaction fees has since calmed down and miner revenue has come back to earth. Miners are now earning less than 6 cents per terahash per day, which is approximately the same amount of revenue they were earning at the bear market bottom in 2022 when Bitcoin was around $16,000 per coin. But miners seemingly don't care. The first difficulty adjustment post-halving was plus 2%, and difficulty is expected to increase again at the next adjustment, albeit we're still in the early stages of the current epoch. Despite the crunch in mining revenue, miners with low electricity costs and efficient ASICs have remained more than profitable, and they are uniquely positioned to experience outsized benefits when the Bitcoin bull market resumes. If you want to mine Bitcoin yourself, make sure to visit marketplace.blockwaresolutions.com where you can purchase ASICs turnkey. As soon as your transaction is confirmed on chain, the hash power will belong to you and you'll start earning mining rewards instantly. And if you're interested in purchasing mining rigs in quantities of 5 or more, then fill out the form in the description and a Blockware rep will be in contact with you. That's all for today. Make sure to like, subscribe, and share the video with a friend.